Welcome back. Let's take a look at how the day finished on Wall Street. The Dow and the S&P both down around about 0.2%. The Nasdaq outperforming, but just dipping into red territory, so not ending on another record high. The Russell underperforming more significantly, down about 1.2%. On the S&P in terms of sector performance, tech was the best. It was up about a third of 1%. Healthcare, energy, the other two positives. Telcos comfortably the worst, down over 1%. Financials and materials close behind. As we just mentioned, tech having a huge run-up this week with the Nasdaq hitting new record highs. We've much more on tap next week with earnings from Apple, Twilio, Facebook, and Square, among others.
Joining us to discuss how far this tech run can go, Lou Basenese from Disruptive Tech Research. He owns shares of Apple. And Max Wolf from 55 Capital. So, Lou, the setup for Apple is pretty bullish. Year to date, it's the #1 performer on the Dow, up 24%, though that did not stop Amazon and Google from delivering solid results. What do you expect from Apple next week?
Look, we've gone from rotten apple to candy apple since late December. If you remember, sentiment was so negative. Shares were trading under $110. And since that time, I mean, in the span of 3 to 4 months, analysts have totally done a U-turn, raised guidance, raised price targets, now have these wonderfully high expectations for the upgrade cycle at the end of the year. So I think the setup is great for Apple. They've just got to keep that momentum going, keep the narrative pointing towards the end of the year in the upgrade cycle. Yet the knock is going to be Apple's still all about the iPhone, but so what? Google's still all about ad revenue. Amazon's still all about online retail. So again, it's the main driver. It's of the business. It looks solid and a great setup into the end of the year. I think it's a long-term stock you got to own.
Max, has Alphabet really upped the ante in terms of advertising performance for Facebook ahead of their numbers next week?
Somewhat, yeah, because they've really shown they can pivot effectively to mobile from desktop. And they've left a lot of the competition behind. And the way they do that is the much lower rates on mobile mean you have to serve a lot more ads. So clearly they beat on the revenue, they beat on the profit, they showed the discipline that a lot of people were afraid they wouldn't have to cut some of the more exciting moonshot projects, to lower the cost basis, and to continue to serve more and more ads on globally dominant Android operating systems. So they did raise the bar or throw the gauntlet. We think Apple, along with Google, along with Facebook, are big beneficiaries of a repatriation tax break because they're among the largest holders of offshore cash. And we also think they're pretty well poised because they're expensive but growing, and a lot of the market is expensive and not growing. And so they have a lot going for them and very little going against them in this equity risk-hungry market that we seem to live in these days.
Amen.
Lou, you know, that exact kind of setup that Max put out there about these companies where they have a good fundamental story and the stocks have been really rolling for a while, it sometimes can get you into a point where investors have to figure out if, you know, the great company that's been a great stock is going to also turn into the great company that for at least a little while becomes a tougher stock to own, just because occasionally you do have these bouts of doubt that hit the market. So how are you navigating that, I guess, in this environment when the Nasdaq's been such an outperformer?
Look, I think you got to be crazy to fight this tape right now. The momentum for the Nasdaq is squarely in tech's favor. I mean, heading into this week, we couldn't ask for a better setup. The read-through from Alphabet's report, you know, 53% increase in ad revenue for Google-owned sites is super positive for Facebook. I mean, we know that those are the two dominant players there. You know, Facebook projections are for about 45% growth on the top and bottom line. I mean, Twitter rallied by double digits, and they had declining revenue. So if Facebook knocks the cover off the ball like Amazon and Alphabet did, I think that sets us up for the rest of the week here to have strong rallies. In terms of risk, yeah, there's always pullbacks. When we've had it cyclically with Apple, it seems like the sentiment kind of sways. But trying to predict that top and that bottom is a fool's errand. I'm not going to do it. I think you got to look at the long-term trends and use any of these dips as accumulation points.
Is there any scenario, this is what, I guess, Max, is there any scenario in which we're sitting here 6 months from now and people go, oh, yeah, we didn't see this one coming? I mean, whenever you have analysts on who are all the time going, you know, the trees, they grow to the sky, and everything's setting up perfectly. I mean, it always, you know, you now have the 5 largest market cap companies are all tech or tech-related companies. I mean, that, if you go back and look what the S&P 500, the top 10 companies looked like, top 5 companies 20 or 30 years ago. Most of those companies aren't even in the top 10 anymore. Is this too much of a good thing, and when does it stop?
Yeah, so it's a great question. On a relative basis, I'm not so worried about tech. On an absolute basis, this market has gone crazy gorging on risk. and has basically bet that the expectations are right and the softer real data is wrong. And that creates a situation where there's a good chance that we get slapped here because two things have happened, right? The sort of most aggressive risk-on money in the room is all the money in the room. The cautious money got redeemed out of existence or joined the bandwagon late, and that means lots of directionality here. But on a relative basis, tech is the one place where the United States is, or one of the few places, where we're the global outperformed by a wide margin, and one of the few places where the growth is so good that the PEs aren't blowing out even though the prices are. So on a relative basis, I like it. On an absolute basis, it's hard on a valuation front not to think this market is potentially egregiously overbought if we start caring about historical valuations again, and that's a big if.
Gents, we're going to have to leave it there. Thank you very much for joining us, Lou and Max.
Thank you.